Let's chat commodities now, which have seen a choppy day yet again. The start of the week itself has been on a very flat note there. The international markets, for one, have seen some more follow-through decline coming in. Remember, previous week we saw gold prices decline by nearly 1.5%. On your screens, very flat trades. 1230 is just about holding in case of gold prices. The Indian markets, in the meanwhile, have seen more decline because of the rupee appreciation. So on your screens, below 29,000 is how the gold prices are trading. It's energy, though, which has seen some gains continue for a second straight week yet again. You have seen the US inventories decline. The US data has been positive. So has been the Chinese imports. Those have been on the higher side. So on your screens, $98 just about attending to in case of NCX crude prices. Let's get on air then. Viren Vakil, he's commodity consultant, Paradigm Commodity Advisors, and he joins us live on Ahmedabad studios. Viren, hi, welcome. With the precious metal space first, and what's your sense coming in for that, especially given what the rupee really seems to be doing?
Rupee has made a remarkable rally after election results. But I think it seems a little bit euphoric, and we may see correction onwards. And as far as gold is concerned, I think market seems shallow, but going forward, downside risk increases because of safe haven appeal is now little bit diminishing.
Viren, how would you look at the base metal space? Because on one side, while there is support from the fact that you have seen strong US data, the Chinese imports have been on the higher side as well. But would you say it's Fed tapering which really continues to cap too much gains in this space?
It's a typically logjam kind of situation as we are seeing in Delhi. Here, tapering is largely discounted. I think US authority has made enough case for early tapering. Supply side, I'm seeing a little bit comfortable. Demand also is reviving. But as global capital flows are now moving into equities, DM, it's basically DM versus EM. So I think commodity has lost its typical sheen. What I would seeing is basically end of commodity super cycle.
Viren, so what would your strategy be then in copper and lead, something like that? What kind of price levels would you have in mind?
As of now, being a counter, very short-term trade, I would prefer to go long in copper just as a counter swing strategy, buying around 441, very tight stop of 438 and upside objective of 447.
Also, how would you look at the energy space now? Because this is the only sector which has seen good, strong gains coming in for 2013. 6% up for the NCX crude prices. Natural gas prices are up in double digits. They're nearly 20% up onto that one as well. Do you see this euphoria continue?
I think here we may see beta kind of rally, maybe a recovery, economic recovery-led trailing rally may be seen in crude oil especially. I would prefer to be long around 59. Upside objective is 6,650 and stop loss would be here 58.
Fair point. Viren, let's also talk about the agro space, and cotton is something that has seen perhaps looking at another record highs in sense of output here. While we have seen very sharp declines coming in for the prices already in much of this year, how would you look at the current levels?
Current level, it seems market seems technically oversold and a recovery bounce is underway. So I would prefer to go long in nearby futures December contract around 18,850. Upside objective is 1900 and stop loss here would be 18,680. I would also clear that I'm having no open positions in above said commodities.
Fair point, Viren. We'll let you go at that. I appreciate you joining us and giving us all your strategies. Let's get in strategies from Kaushal Jani.
Precious metals has seen some beating up in the domestic exchanges, obviously because the rupee appreciation against the dollar, and we expect this appreciation to continue at least for the day or two. Overall, the tone seems to be on a slightly weaker note, seeing the direction of the rupee. For the day, one can sell gold at around 28,830. with a stop loss of around 28,900 and a downside target of 28,740 to 28,700 levels. One can see a slight momentarily weakness in the domestic prices of silver. One can sell silver on the domestic front at around 43,800 with a stop loss of around 44,100 and a downside target of 43,500 to 43,400 levels. One can buy copper on the domestic front at around 444.50 levels with a stop loss of around 441 and upside target of around 448 to 450 levels. For the day, we expect a great pullback on the domestic prices of crude. So one can go long in crude at around 59.80 on the domestic front with a stop loss around 59.40 and an upside target of 6030 to 6050 levels.